This is one of the biggest mistakes people make when they're selling their primary residence and they're trying to avoid paying capital gains taxes. What people do is they've lived in their home for a very long time and then they move out, they rent the property out, and then they want to sell it a few years later. To qualify for the $500,000 capital gain exclusion on your primary home, you had to have lived there the last 2 out of the 5 years. This is the mistake that most of these people make that lived in their home as a primary residence for a very long time. Then they move out and rent it out and then come back to sell it because now they haven't lived in that home for the last 2 out of the 5 years and they lose out on the primary home exclusion. I mean, if you did a little bit of tax planning, you could have easily avoided that mistake, but people don't know. What happens after you move out of that primary home is that now it becomes an investment property. And say you've rented it out for the last 5 years. So when we go to the look back of the 2 out of 5, you haven't lived there for 2 out of 5 years, and then poof, the primary home exclusion is gone. What this means that now you have to pay capital gains tax on all of that income or that profit from the home because you didn't live there last 2 out of 5 years.